So one of the things that I loved about this strategy when Curtis and I talked about this, when was that February in Vegas?
Uh-huh.
Yeah, so we originally talked about this strategy back in Vegas in February. And one of the things that I loved was it was a case of just looking at the market, saying, okay, there's a lot of turmoil, there's a lot of things going on, but where are people still actively buying? Where are people still making money? And going after those places. And one of those is obviously personal services, which was an idea from Curtis. And it's funny, I just did a live, and part of that live was talking about the fact that as deal makers, we don't really ever want to have to do marketing. In some cases we may have to do it, but the goal in general is being able to buy an asset that even that asset itself, and it's kind of one of the cool things, there's already a ready-made market. We can put that business on biz by sell. We can take that business to a broker. It's not like we got to build a huge brand in order to be able to buy and sell businesses. There's a market here for us to be able to buy the businesses, and there's a market for us to be able to sell them. And so it's kind of like the stock market or anything else. Our job, just like in the stock market or in crypto, is to be able to find the very best assets. And when it comes to finding the very best assets, we don't have to go into something where it's going to be an uphill battle where we got to figure out how we're going to find those clients. We can look at the trends, we can look at the businesses themselves, and then decide, oh, like, hey, this business, even with everything going on with COVID, it's already making a ton of money. We can go after this specific type of deal. And now we're not out there doing what I call hunting for clients, where you got, the person that started a business from scratch, they got to go out and hunt to find that next client. And that's exactly what we're trying to avoid. So one of the places I wanted to start was, you kind of came to me with that concept and idea. Where did you come up? Like, where did that come from?
Well, for me, it came from just the looking at it from an innovative perspective, right? It looked, and when we did the PEFI, the initial private equity incubator, we did the 8 R's, right? Remember, and part of it was to utilize each of those R's and look at the market and go, okay, how can we really leverage what the market shows, and how can we actually really leverage what you have taught and what others are teaching. And so when you kind of amalgamate some of those things, you take a little bit from here, a little bit from there, and all of a sudden you have a strategy that now you can go test. And that's I think that's the big thing, because we have been trying things over the last year and a half too, but it was only when we really start honing in on, okay, let's work our way backwards. What do we need? Well, we need clients. And so one of the things that we started doing was actually utilizing brokers, because quite honestly, the broker works for the seller and he needs to sell. And so instead of thinking that was a drawback, we started utilizing that as an asset. So all of these things become from liabilities to assets. How can we utilize everything in our value stream as an asset? How can it help us get to where we want to go?
I love that. And you're right. I think going back for us, that was one of the things that we focused on, was finding those direct leads for potential sellers. But I think you leave a lot of opportunity on the ground if you're not using the brokers. Just like I was just saying, like, hey, there is a ready marketplace. There's a ready marketplace of things to buy, and then there's a ready marketplace of buyers who want you to sell to them. So not to use that, I think that is just super valuable. So one of the places that people usually skip to is talking about the deals themselves. But I want to spend time talking about, you've obviously got these 3 deals that are closing, some more that are going to come over the next 30 days. What about what does that look like the last 6 months as far as the process to get there, to get these in the pipeline, and what did it look like as far as the work of filtering out, because I'm sure there was a lot of filtering out all of the deals that you didn't do.
Yeah, and that's a great point. There was, we probably, and Aziz and Brian can attest to this, we probably go through, if you look at our pipeline and the filtering process, we probably, to get one, we probably have gone through at least 50. And that is, and then to get that 50, we've probably gone through about 100 of just looking at them and trying to narrow them down from a criteria. So you first start with, and we were talking about this before we started recording the call, Derek and I and others, we were talking about, the what are you going to niche in? And so you could, what industry? So the broker will ask you, what industry do you want? Well, we decided that since, personal care, you had mentioned, Ace, we talked about this a few months ago. We decided that we were going to specialize in personal care. So now, what is the elasticity of the multiple? Where are the multiples? What's the low end and what's the real high end? And what is the high end doing that the low end is not doing? And so we had that whole value builders piece where you can clearly see, like, we're looking for absentee owners. Well, we pay a little bit more for an absentee owner because the shop is being run by itself. We look for 3 years in business, because that takes away, if you have 3 years of business, you've already taken away much of the startup risk there. You're looking for tax statements and accounting, P&Ls, cash flow statements, et cetera. That means they're organized. And so you're constantly looking for things that would fit within the parameters of what you're trying to accomplish and buy. And if they don't, quite honestly, a lot of them won't. And so that's just the first filter. Then the second filter is, how flexible are they as it relates to price? We're not going to take all owners, because those owners, we have owners who want all cash, and that's not going to happen, at least from our perspective. If they may get someone who needs a visa and they have all cash, they come from, Venezuela, well, maybe not Venezuela, but they come from Colombia, and they have all cash and they just need a visa, and this work will allow them, buying this business all cash will allow them to get a visa. That's not our market. And so we're really clear on what we are trying to do and what we are trying to buy, what our multiples are, with the range in which we're trying to buy. And then we did as the structured deal, sustainable deal structure, where you taught us around the notion, or put the notion of, your first investor is your owner. That's your first investor. And we just took and ran with that, basically. And so over the last 6 months, and call it the last 4 or 5 months, really, since our offsite, since that time, we have just been messing with the formula to the point now that we got it dialed in. And once we had it dialed in, quite honestly, it's like we could have probably bought 10 businesses easily, but we have to fit into the strategy.
I don't want you to get into the deal structure yet, because I want to go one by one and I kind of walk through those quickly. But okay. I think, it's going to be really valuable to folks, I think, to talk, kind of what we would do even in PEFI, but to get into the nitty gritty. Sometimes it's tougher
Yeah.
with the folks that are kind of going through this process and like, I don't know how much I want to share and giving out the numbers and all this. And so I think this is a cool opportunity for folks to kind of walk through and see, okay, this is specifically how this deal was structured. And so probably what would make sense is just to take kind of 2 minutes on each deal. And with that specific deal, just a quick overview of kind of three things: how the deal was found, and initially, what that process was like to get the broker over the hump, or convince them to even be open to that type of deal structure. And then, what was attractive in that business? Did it have the more than 3 years? What was kind of, and Shalina's asking how big it was. So just basically, the number two would be details about the salon, and then that deal structure that you did on the deal. But I think that would be cool for each one. Just we'll just start one, and then we can ask questions about each one. But those three things, like that process to kind of get in the door and convince them to do that type of deal. What was attractive about the salon, and what how big is it? How many people work there? Were two things to include in that from Shalina, and then what that sustainable deal structure looked like by the time you're getting the deal closed.
Okay. So let's start. Again, let's take the last one we just did. I'll talk about that one. Um,
Perfect.
the the deal went, unfortunately, it went for 2.5 months, and we initially found it on Biz by Sale. So I'll step back and say the most critical person in the deal is the broker. And so first, the rapport that you have with the broker becomes very important. The broker can make or break you, right? And so the rapport, we found a couple of brokers around the country. Aziz found a broker for the East Coast. We found a broker for the South, in basically Trans World. We know their kind of system. We know how they operate. And so we found a broker there in North Carolina who worked for Transworld, we sat down several times with that broker to help him understand how we buy and why it was so important that we buy this way. And oh, by the way, he can participate if he chose to in the equity piece as well. And he actually did. So that was important, that he understands how we structure the deal, because he then will talk to the owners about, hey, I have someone, and here's what they're doing, this is how they're structuring the deal, or how they would potentially structure the deal. He never brought us anybody that wasn't interested in that type of structure. So that's the first
That's
thing.
huge.
That is huge. I mean, it's like that's the first filter, was how the broker was bringing us deals. So that's the first thing. And then from there, you start the process. So this particular deal was $80,000. It was only $80,000, and they're basically doing, roughly, the numbers before COVID, they were doing a free cash flow of about $11,000. Numbers after COVID, they are now back up to about 8.5 or so. And it's a really sound, it literally was a negative in terms of, or a point 0.8 or 0.9, I think we calculated as a multiple. So from that perspective, it was really a good deal. We had to go back and forth with the owner because we had an offer on the table. Our offer was 70,000 and 10% equity. Actually, it was 50,000 down, 20,000 of seller finance, and then 10 in equity. They rejected that one. They said that they would accept, cash, and they would take back some equity. Now, part of that equity piece was that how we sold that was we basically said, look, here's our plan for the next 90 days, and here's our plan for the year. Here's how we're going to grow the salon. And you can take all of this money now, or you can invest a little bit, because what's your return going to be? So we laid out on a spreadsheet what their return would be if they went to a bank, what their return would be in a traditional money market, and even what their return would be in the crypto market, the highest that you could possibly get. And then we showed what the risk was on their $10,000, basically. Or actually, it came out to $8,000. And so when we showed them that, they could see clearly that, for risk reward ratio, a balance of risk reward, it was better to leave the $10,000 with us, because they were going to get about a 50 to 60% return on their investment than they were to risk it in like the crypto market, where you could get a lot more, but you could also lose it overnight. And so that was important, that we helped them see how that if we went with this type of structure, the advantages of that. So they got a chance to really understand, hey, we're getting money up front, but we're also getting a chance to participate in the growth of this company on the back end. Now that helped us, obviously, because the transition is more along the lines of just swapping equity positions, as opposed to the owner really, washing their hands of the deal. So,
Yeah.
that was a major portion of it. So $80,000, 70,000 up front, with 10,000 on the back end. Actually, it worked out to 72,000 and 8,000 on the back end, and then we just basically we're starting to now go take over. So we had an operator in there who was one of the other investors. She's going to operate it, and so I think that kind of answers a portion of the question, Ace.
Yeah, definitely. And with that deal, like what was the multiple? What did or I guess just like the business itself, what was it doing?
So it's doing roughly, our multiple that we bought it at was 0.9, if you would. It was cash flowing at its height. At its height right now, it's cash flowing about $8,500. We bought it at 80, so it's
Nice.
0.9. It did last year 215. The year before it did 300, and it was in the 300. The last 4 years, it's been in the 300 to 350 range, basically. It doesn't. One of the attractive things, and Shalina asked how many employees they have. 8 employees there. All of them are 1099. The structure is a salary up to a point that they hit, and then they go commission, but it's all 1099, which is really nice. The other thing is that the tips are all in cash, which means that you don't pay any fees, any credit card fees, any of the taxes, quite honestly, because it's all in cash. And so the owner was very strategic in the setup of the accounting. He happened to be a CPA, quite honestly, and
That's great.
yeah, it was. He was very strategic in how he set this up, in terms of minimal taxes on their part, and very simple, straightforward accounting system. Um, so they were able to, really, really, really do well throughout the COVID year or so, year and a half or so, and getting back to the point where, um, the company is, really moving. The opportunities that we had is, one, you could go in directly. We're starting to do from the standpoint of expanding the product line. So it was just nails, but they have an esthetician in the back there who we can expand that product line in terms of facials. which allows us to expand in the retail side as it relates to lotions, as it relates to the products, facial products, etc. And then the e-commerce side. So we have the three legs, the operations, e-commerce, and the credit side. And so that should help us allow us to at least increase that cash flow to double the cash flow. When we're looking at doubling the cash flow before the end of the year on that particular deal.
Love it. One more question on that one, and then we'll move on. Yeah, the chat thing disappeared. Hold on. So Adrian asks, what is the structure behind the structure? How do you apply 40-50% return on the 10K left behind by the owner?
Okay, so roughly once we finish paying the investors like yourself, Adrian, and Kay, and others, John, etc. Once we finish that and all the bills are paid, we basically last month we had roughly about $5,000 left over. Their 10% represents $500, and you can do the math from there. That's $6,000 theoretically projected on their $10,000 investment. They get a monthly payment just like everybody else, and that there it is. Does that help, Adrian? You can put it in the chat, because that's basically, after all is said and done, the equity position that they have is 10%, and they then get 10% of the free cash flow at the end of the month.
Awesome. All right. Just so we do have a little time for everybody to go through any questions or anything, I'd love to still take a couple minutes on the deals that are coming up, and kind of walk through that same thing, because I think this is where you guys can start to see what it's like to get a deal closed, and it takes a little bit of the mystery out of it. It's not any kind of magical thing. It's literally just going through these steps to be able to get a deal done.
Yeah. So let's talk a little bit about the deal in Naples, which is probably the better deal as it relates to the high ceiling. The owner founded. She owned a huge spa, a couple of huge spas in Naples and Sarasota. She decided to shut those down or sold them, and wanted to have a little boutique spa where there's only a couple of people coming in at a time. It's upscale. The products are very upscale. The clientele is upscale, etc. And it's all natural. No chemicals, no preservatives. Everything is natural. And she just wanted to get out of the business because she had another calling, literally had another calling. And her calling was to be able to go and work with Dr. Joe Dispenza, healing people, healing them through their mind. So she wanted to get rid of the business. And she and I talked initially. She went on vacation, came back. A month later, she had 4 or 5 people who were in line. Again, no broker this time, but rapport. That's what, she preferred what I was talking about, because I talk about continuing the legacy, continuing, the infinite game. I talk about that we are just caretakers of the entity itself. It's not about the seller, and it's not about me, the buyer. It's about the entity. And people like that. They like the fact that it's their baby, and somebody's going to actually take care of their baby and make sure that the next person in line over the next 50 years is going to take care of their baby. So she and I went back and forth. That deal was, and because she was setting it up to be a franchise, it has all the makings of something that is unique and original and franchisable. She has all the systems in place, and even though she worked a couple of days of the week, She had manager in place, etc. So all of the systems kind of were in place to build a franchise. She didn't have online presence, but retail and services was about 50-50. She does about 20 grand a month in revenue and roughly about 7,000 or so in free cash flow. Once everything was said and done, once the financing piece went through, let me go step back and tell you what the structure of the deal was. The structure of the deal was all cash, and and 5% to her. Now, why would I ever give 5% and I paid her all cash? It was because she still is the face of the literally what's going to be a franchise, or at least I'll just say the face of multiple locations. Think of it as Colonel Sanders and Kentucky Fried Chicken. Colonel Sanders didn't own Kentucky Fried Chicken, but he was the face of Kentucky Fried Chicken, and they paid him to stay as the face. Think of uh, Wendy's and Dave Thomas. Those are when Dave was living. Those are, and Wendy actually is his daughter and the face of the franchise itself. And so we wanted to make sure that one, she stayed involved because of what she's doing, and two, that we had a um, somebody that represented that brand. She represents the brand. She's Belgian. She's European. She has connections in France. She has connections all over Europe. She has connections out here, etc. We wanted her to stay as the face, and so we gave her a small percentage to stay. And so that was a structure that everyone was satisfied with. She's ecstatic. She can go off and to Costa Rica and do the things that they're doing that she loves to do, and still be involved. I talked to her. In fact, we'll meet on Zoom tomorrow to go over just what happened this week. What the numbers were, what everyone was doing. We get an end of the day report every day from everyone, or from the front desk. So it is an absolute, that deal was a great deal for us in terms of the structure, just satisfying her. And, the fact that, and I was saying, Ace, before you got on, that I talked to her about the recession, or the what I believe is a pending economic downturn. And she said, with this clientele, they don't look at prices, they don't look at cost, and they, you know, at least 8 of them, at least about 10 of them, she said, fly in their private jets. They don't, they don't have recessions. So they are looking for what's new, what's hot. And so when you talk about that clientele, it's now a matter, it's a different, not marketing, but it's a different strategy than worrying about, whether you're going to pay the rent or not. And so that deal was I thought a very sweet deal for us. It cash flows very well. It has tremendous upside. No online presence is being done, even though she has a Shopify store, and everything goes through that Shopify store in terms of like the transactions, but there's no real online presence. So we're gonna take that and um, take that and make it into something. We have a e-commerce specialist who's going to put us in Walmart, upscale products, and obviously we're going to do the credit play. So that particular deal was one in which we are very happy that we are able to secure that. The other 4 or 5 people, 2 of them were estheticians as well. So there were people in the industry who wanted that place, and we were able to secure it mainly because of the relationship and the rapport that we had with the seller.
I love it, man. I love it. Um, I think that's any other, I think, we got a couple just general comments. Adrian says, nice move, win-win for everyone. Shalina was asking just real quick if you want to talk maybe just 1 minute, and we'll go
Yeah.
to everyone. You see that question. Obviously you mentioned that it was absentee owner. For the new owners, what as the new owners, what are you spending your most time doing, or what's like the next 90 days kind of look like?
That's a great question. So most of my time is being spent around coordinating other pieces of it because they have it, they have the shop, and they do call me around, making, little local decisions